This week on the Retirement Quick Tips podcast, I'm talking about Trump's tariff turbulence. And today I'm talking more about what you can do about the recent higher volatility in the markets, the implementation of tariffs that literally just happened yesterday as I'm recording these episodes, and a possible economic slowdown in 2025. Now, yesterday I talked about not panicking and selling, but you may want to take this opportunity to rebalance your portfolio and take excessive risk out of your portfolio, out of the stock market. And today I want to dive a little bit deeper into that because one of the patterns that I see when I'm talking with clients and just talking with people in general, because as soon as somebody finds out that I'm a financial advisor and what I do for a living, they want to talk shop with me about what they're investing in. And usually, actually, they never ask my opinion. They just tell me what they're doing. And it's like, great, go for it. I don't really care unless you're my client or unless you've specifically asked for my advice, then I'll happily give it to you. But it's funny how people, they want to tell you how smart they are and how much they know and how successful they are when you didn't even ask. But related to that, I think one of the themes that I've noticed in the last several years is a complacency. We've had several years of very strong growth. And if you look back on your portfolio, go back 5 years. Okay, 5 years ago, we were at the height of the existential crisis with COVID. Spring of 2020, COVID hits. But since then, that has been a major fork in the road because since then, you've had tremendous growth in all kinds of asset prices, housing, Bitcoin, stocks. And you didn't even have to be a good investor. You just had to have money invested somewhere. Like you had to have already owned a house. And if you owned a house, then it wouldn't be out of bounds to see your house double in value over the last 5 or so years, which is crazy. Housing prices don't go up like that, and they shouldn't. And that's not normal. And the same thing is true for stocks in general. Despite the downturn that we had in 2022, that was pretty brief. It took the full following year in 2023 to recover. And then 2024, we were off to the races again. So this complacency that has developed, because not since 2008 have we had a meaningful, long-lasting, and painful economic recession and a coinciding market downturn. I mean, if you were around in 2008, which I know most of you listening are, I was around. I started my career as a financial advisor in 2007. I mean, the timing was terrible, but it was a great learning experience because it was so painful. It was so long lasting. And it has been so long since we felt the pain as a society, as individuals, of that kind of deep, dark recession. And so as a result, you kind of get used to the new normal and expect that stock prices, housing prices, crypto prices, everything's just going to keep on keeping on and keep going in the right direction. Well, what happens when you become complacent like that is that you don't rebalance, you don't look at your portfolio with the viewpoint at all that it could go down. But what I want you to do to remove the complacency and the higher risk is I want you to look at your portfolio value today. Could you afford a loss of a third of that? If a third of your investment portfolio got wiped out, what would that do to your plans for retirement? What would that do to your spending if you're already retired? See, many people who are close to retirement are already retired. You cannot afford a 25, 30, 35% drop. Yet many people, because they've had such strong returns in pretty much anything over the last 5, 6, 7, 8, 10, 15 years, they've become so complacent that they don't realize that that's even possible. So the solution to this is to reduce your risk. Doesn't mean going into all fixed income bonds, cash, hiding it under the mattress. No, that's not what I'm talking about. But if you look at your portfolio today, let's say you have $1 million portfolio. If that takes a 30% hit or a 33% hit, now you're looking at $700,000 or even sub that level. How would things change? We don't want to be complacent. Can you afford it to drop to that level? If not, then you want to take the time and the effort to rebalance your portfolio to reduce your risk. I think we're honestly living on borrowed time. It's not a crazy thing to say that a recession is coming. It is coming. We don't know when it's coming. It could be this year. It could be next year. We might even hold off for another few years. But if you can't afford to see your portfolio drop by 20, 25, 30, 35%, most of you, how you're invested today, I would almost guarantee that most of you listening have too much in stocks, simply because it's gone up, up, up with very little breathers over the last many, many years. And you've enjoyed those gains and you're reluctant to sell because you don't want to miss on the continued gains. Well, the music is going to stop at some point and everything is fine until it's not. And so regardless of whether I think we're on the cusp of a recession or not, I think it's wise to stop being complacent. I think a lot of people need to snap out of their complacency and take a really good, hard look at their investment portfolio and make sure that it is protected so that you can weather the next economic storm without it turning into a devastating crisis personally. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.